Well, a series of unusual oil trades tied to the Iran war raising red flags this week, among them a volume surge in WTI on Monday at 6:50 a.m. Eastern Time, 15 minutes later. After that time, President Trump posted on Truth Social that he was halting planned attacks on Iranian power plants and energy infrastructure. That's when oil plunged. Former SEC enforcement attorney Jacob Frankel thinks it's absolutely worth investigating. Jacob is now Dickinson Wright's chair of government investigations and securities enforcement. Jacob, great to see you.
Good to see you, Melissa. Thank you.
Do you think this will get investigated? I mean, so many people are pointing at this and saying this smells, this looks, it's just suspicious.
I think it's in the administration's interest for it to be investigated. Yes, I think it will be investigated because of the unusual spike. I think we have to also be mindful as to who could be doing this investigation, but we also should not lose sight of if there was material non-public information actually communicated, where was that communicated? The natural assumption is that occurred in the United States, but it could also have been within any of our foreign government partners who could have also communicated information. So if you think about the whole world of information, and in terms of who will do the investigation, when we're talking about spikes in oil, that's the jurisdiction of the CFTC, the Commodities Futures Trading Commission. And when it comes to the equities, to the extent that there was unusual trading in any equity securities, that will be the SEC's division of enforcement.
Well, Jacob, there's $1.5 billion of notional value S&P futures that were bought 14 minutes ahead of this. And that in and of itself moved the market. Then subsequently you saw what happened. So there's got to be some paper trail to this, I would imagine. And I think in your seat, you can understand why people watching this say the entire game is rigged against us.
That's a natural conclusion to reach. And that's exactly why I said what I said, which is I think it's in the administration's interest and the regulator's interest to conduct an investigation, because it's the opportunity to show, through the investigative process that it did not occur here. And you're mentioning, the trading in the S&P. That's clearly within the jurisdiction of the SEC, and I have great confidence in the experience and expertise of the SEC to conduct such an investigation. I also, this to me is also a flashback. It's a flashback to 9/11, when there was a lot of there was put option trading, there was short selling in advance of the Twin Tower attacks and the 9/11 terrorist attack on the United States. A lot of that investigation was principally centered overseas, involving trading by Middle Eastern interest. That investigation ultimately did not result in any enforcement actions. Why? I think that's still a big mystery. But at the end of the day, this is the kind of trading activity that absolutely should be investigated. And to restore confidence in the integrity of the markets, it's necessary for the regulators to do so and to report their findings, particularly if ultimately there is no enforcement action, which we really can't prejudge at this point.
There are also suspicious trades surrounding Liberation Day, Jacob. So this is not the first instance where there are suspicious trades surrounding an event that insiders, whether they be in the United States or out, might have known the outcome. If you were still at the SEC, how would you start investigating? Where would you look first? How do you go about this?
The way you go about it is the first thing you do is you pull the records on the trades. Who was trading? And then you try to find out what are their connections to potential sources of information. It's always about connecting the dots. And the place to start is always the case in what I'll call financial crimes, capital markets investigations. It's follow the trading, follow the money. And that's really where the investigation will start and will lead. And one of the things that we've seen historically, when the SEC in particular, but also the CFTC, believes that there was a need to take emergency action, through the courts, they can freeze assets. But let's also not lose sight of the fact that we now have the former chairman of the SEC as the United States Attorney in the Southern District of New York, who has gone on record as saying that he's going to be conducting investigations and is conducting investigations involving the prediction markets. We've already seen criminal case brought in Arizona. So I think there are a lot of jurisdictions that will show interest. And I think going back to a point that I made early on, the same type of information that the SEC or CFTC or U.S. Attorney's Office would look at, so too would the foreign regulators to the extent that the activity is taking place outside the United States, because ultimately jurisdiction matters. But historically and typically in these type of investigations, there's a lot of deference to the U.S. regulators, U.S. enforcers to take the lead.